Small cap fund managers posting monster-sized returns. We're talking about the 5-star rated Entrepreneur U.S. Small Cap Fund. It is up 28% in 2018 versus just a measly 12% gain for the Russell 2000. And joining us live, the manager of that fund is Joel Shulman. Joel, it's a pleasure. Thanks for joining us. Coming all the way up. You're from Boston. You're on set, and we appreciate it.
Thanks. It's great being here.
Okay. And don't lie, because we'll know. Even as a optimist, you have to be optimistic to be a fund,
very
fund
optimistic,
manager.
right? Yeah.
Even as an optimistic small cap, did you expect your fund or small caps to do so well this year?
No, you know, this has been a big surprise. I mean, if you said to me at the beginning of the year 15%, I would have taken it in a heartbeat. I mean, it's been a huge surprise.
Most people would.
Yeah, I mean, we had a second quarter that was up almost 20%. I mean, it was highly unusual. And so, you know, we have to remember there's been a lot going on in the markets right now, a lot of job growth. A lot of R&D growth. I mean, they've been growing 30% per year for the last 3 years, about 25% for the last 5 years. And these are companies that have profits that are up close to 30%, with revenue growth around 15%. So the market, small caps, U.S. small cap growth is generally up overall. But it's these entrepreneurial stocks with high job growth, high R&D growth, high profit growth that seem to really be doing much better than ever.
And I know that you're not going to talk about individual names necessarily, but give us a name in the public information that you have invested in that you maybe have been surprised by, that fit that entrepreneurial mantra.
Well, I mean, we've got a number of these small caps like Twilio and a few others that, you know, they're up, you know, over 100%, 200% in some cases. I mean, we had... In the second quarter, we had 82 stocks. I mean, so this is not like 10 stocks that we just happened to get lucky. We had 82 stocks that really did well, and probably 30 or 40 of them have returns over 40% this year. I mean, quite a few stocks are way up this year.
Does that, I don't want to say make you nervous, it's the wrong term. Does that make you step back and go, okay, that's a big gain?
Yeah.
What now?
Well, so absolutely. And so I think a lot of this has been international flows coming over here. I mean, we had, you know, earlier in the year, a lot of flows were going into international markets. In the second quarter, we had a lot of international markets peeling off, you know, so coming out of all the emerging markets, Latin America, China, and so forth. So we had billions of dollars. We had $12 billion in 1 month that came pouring in and primarily benefited U.S. Treasuries and equities. And in the equities, I think it was small cap. Yeah. So to your point, I think we've had a good run. I mean, I think we see continued growth. It's not across everything, so people have to be careful. I think it's a stock picker's market, and so you want to look at specific companies for growth. But it's primarily healthcare, tech, and consumer discretionary.
Has the death of active investing been greatly exaggerated?
Well, this year, I mean, this has been a stock picker's market. So if you know, for your listeners who are stock pickers, this is their market.
You know, the good news about buying a broad market ETF is that you're not going to underperform the index because you are the index. The bad news is that you're not going to outperform the index.
That's right.
Because you are the index. Have we gotten too, I don't know, chicken in our investing?
Absolutely.
I'm struggling for words at this hour.
But I think that's a good word, and it's particularly for large cap space. I don't know how many institutional investors that I've talked to. They talk to these consultants, and the consultants will not get them out of any basket.
Because we've been beaten over the head with every commercial and every advertisement in Barron's on every weekend is like, don't try to beat the market. You can never do it. Why try it? It's almost, to me, that seems a little un-American. Why try? You're never going to win.
Well, you know, it's interesting.
Just finish 500. Be happy.
It's interesting. Our biggest alpha for the last decade has been in U.S. large cap, which is counterintuitive, right? Normally, you have managers who come in here, small cap or non-U.S. But our biggest alpha has been in U.S. large cap because it's easier to pick out the handful of entrepreneurial companies among the Fortune, 500, the Russell 1000. I mean, they stand out like red dots in a sea of white dots. I mean, there's just only 30 or 40 of them.
Yeah, and you've also, I know, gone locally. Names like a HubSpot. You're based in Boston, or Boston Nutanix.
Yeah.
Some of these small cap biotechs.
You're right.
Technology has done very well for you, has it not?
Yeah, tech.
Because I always think big cap, Amazon, Netflix. No, small cap tech's okay.
Small cap. This has been a small cap market. I think we're going to continue to see benefits so long as the risk capital's coming out of international markets flowing in. Maybe by year end, when you said to me, am I a little nervous? I think by year end, some of the flows will start going back non-U.S. Because, you know, they've been so beaten up. I mean, people in the U.S. forget that the rest of the world is suffering, right? I mean, in terms of the performance. I mean, so there's only a handful of markets in the world that have been positive for 2018. U.S. has been the biggest beneficiary, and it's been small cap growth.